Bill stock and my company analysis research reveals that this is one of the best fin stocks, software stocks, and AI stocks for 2021. This is part one of a 4-part series where I break down the whole company in detail, uncovering its huge potential. This is going to be my best video yet, so come join the community and let's chase financial freedom. Welcome to our financial future. This is a channel designed to build a community of investors so we can all reach our financial freedom. If you're new here, I have a 7-hour stock market course in my playlist that will teach you how to do research and value companies. I also have the links in the description of the whole course. Feel free to join my chat Discord as well. Make sure you hit that like button so the YouTube algorithm can help other investors find my videos so they can learn. Hit that subscribe button along with the notification bell so you can get the new updates when I release them. If there are any stocks, research, or any videos about information that you want, be sure to put it in the comments section below and I'll get to it. The first thing we have to notice about Bill.com is the amount the stock has grown since its IPO. Its ticker is BILL. We're going to dive deep into this company and what they do. They're in the fintech space, so it's a tech company, which can get quite complicated. When it comes to new technologies and investing in them, you have to understand how the product works, so you're able to predict how the product can change going into the future or what could hinder it as well. When we see new technologies coming into spaces like this, we have to understand what problems they are solving. Will these solutions be long lasting? And will they have further growth ahead of them? When it comes to Bill.com, they solve some pretty tedious, time-consuming tasks. They are a cloud-based software that creates a seamless connection between customers, suppliers, and their clients. The platform generates and processes invoices, streamlines approvals, sends and receives payments, it syncs with their current accounting systems, and manages their cash. They are central to small and medium-sized businesses because they integrate with popular accounting software solutions, banks, and payment processors, helping them with just one single connection instead of relying on multiple avenues to get their work done. Their main focus is on the accounts payable, and this is an important line for accountants when it comes to reporting a company's financial statements. This is the process of one end to another of the billing cycle. Someone sends the invoice, the person receives it and confirms if it's correct, and then the bill gets paid. For many small businesses, these tasks fall on the business owner, which takes away a lot from their productivity. That is time where they could be focusing on other small areas of the business. Small business owners have to keep track of what they owe other people, which is the accounts payable side of the business. What people owe you is the accounts receivable sides of the business. The biggest issue with this process is the amount of paper you have to deal with when it comes to filing away the invoices. The use of electronic records speeds up your ability to store and retrieve information, request approvals, and follow audit trails if you ever need them. The software also prevents the possibility of human error to read invoices so it can match them against purchase orders and help flag and prevent duplicate bills and double payments. Also, the timing of payments is another factor when you have dozens and thousands of vendors. Paying them too early can deplete cash reserves when needed, or paying too late can leave you with extra fees. In the real world right now, some invoices show up as paper. Some show up as attached to emails, which both of these can get sent to different people. They can end up in different places or different employees' inboxes until they are dealt with. They will have to be manually entered into the computer's accounting software, and then the paper ones stored away elsewhere. If there is anything inaccurate about the invoice, then someone has to make sure it's okay to pay it. A form of communication usually done by email is then established, which usually doesn't get stored with the invoice and can cause confusion later on down the line. If communication through email isn't established, sometimes these invoices can slip through people's minds. Bill.com digitizes every invoice no matter how they come in. They can be sent right to your Bill.com inbox, or you can even take a picture with your phone where the AI will create a template for that invoice as it records the data. This will help you store all your invoices in one place so the business can stay organized. The intelligent virtual assistant captures the data and automates the entries for you to review and learn patterns over time on how you interact with the software. As a business owner, you can customize your workflow on which bills are in line for approval. The system will notify the right people to ensure the internal controls are followed, and this can be all done remotely and by mobile phone. Businesses can also set up automatic payments for routine billing. You can also catch any issues with the invoice. Maybe the purchase order doesn't match up with the invoice amount. All these small details can help with audit trails. Since every step the invoice takes gets logged, this will make audits easier. Whenever it comes time for an audit, every piece of data is there and organized to make the process smoother. Once it comes time to pay the invoice, you can approve it from any device from anywhere. You can pay by ACH, virtual card, paper check, which Bill.com will print and mail for you, saving you time, and they can even send international wire transfers. Bill.com syncs to leading softwares like QuickBooks, Oracle NetSuite, Sage Interact, and many more. Syncing with these accounting softwares leaves you only having to process one account's payable invoice, as it will automatically get uploaded into your accounting software. Businesses have to send out invoices as well. This is the accounts receivable side of the business. When it comes to sending invoices, you want to establish how you want to get paid, include a due date, and also the penalties that come along with late payments. It's important to be aware of your cash flows to track payments and make sure overdue payments get paid by having a follow-up plan and reminders for the customers. The ability for small businesses to be able to handle cash flows helps them manage things like inventory. Cash is king for these small businesses, and being able to use Bill.com helps them have visibility into their cash to make critical decisions with the right information on the move. Accounts receivable automation from Bill.com moves invoices into the digital platform where it takes your company's data to automatically create invoices, saving you time from manually writing invoices. It also can have preset dates to be delivered on while sending reminders to those who have bills past due dates. It also supports multiple types of payments like ACH, PayPal, and credit card. Digital payments can allow you to get paid faster by not having to share banking information, and you can set up recurring payments, which gives businesses more time for other things. Bill.com's accounts receivable process helps you deliver invoices faster, without paper, and on the go. Bill.com creates invoices, credit memos, emails, and reminders from built-in templates. You can pre-program the certain number of goods, services, descriptions, and prices in advance so they are consistent each time they are sent out. This whole platform helps speed up everything for the customer and the suppliers. Their platform supports ACH payments, also known as automated clearinghouse. Businesses use them for disbursement and collection. This makes it easier for businesses to switch from paper checks, credit cards, wire transfers, or cash. ACH payments are cheaper than wire payments or credit cards, but also take longer. For example, if you get paid by direct deposit from payroll, then that's a type of ACH payment. Businesses use them because they are cheap and ensure the validity of the customer's identity, routing numbers, and to identify possible fraudulent activity. All of this protects your business. The benefits of these digital payments as well is that you can cancel payments instantly and process it again if mistakes were made. If it was a check, then you'd have to void it while it's in the mail and send another. Bill.com's wire transfers can reach over 130 different countries, but these payments cost more but are faster than ACH payments. When you send money internationally, your bank will charge you a fee, and this doesn't include currency conversion. The receiving bank in the country you are sending it to will have to change that currency from the money you sent. The receiving bank may charge an incoming international transfer fee as well. Some vendors want to get paid in US dollars, so you don't have a choice. Some wire transfers through some banks can cost up to $38. Then another banking fee on top of that on the receiving end before the payment gets to the vendor. With Bill.com's wire transfer program, that $38 fee becomes $9.99 when paying in US dollars. Some vendors might want to get paid in their local currencies, and Bill.com can do this as well. Doing this through your bank, you will still get the $38 fee and a possible fee from the receiving bank. If you go through Bill.com, the wire transfer has no charge and offers competitive conversion rates. The receiving bank in their country doesn't charge a fee and your vendor gets the full amount. You can see there is a clear benefit to saving money when dealing with international vendors using Bill.com's platform. Being able to save any money you can as a small business could be used in growing it into something much bigger down the line. Since Bill.com digitizes its transactions, they become easy to file away. Since they are digitally filed away, it makes them easier to access by searching your database. This comes in handy when you have to provide files for being audited. An audit is usually done by a third party and is an examination of your financial reports. This is done so that your financials are a true reflection of your current business and in case businesses report misleading financial information. An auditor will send a document request list. Then, office staff will have to gather all items off the list. The auditor will review the information gathered and can ask for supporting information after. The office staff goes back to the filing cabinets to gather the information requested. The auditor will scan the files and the office staff returns all the files. With Bill.com eliminating paper and having easy to find digitized records saves you lots of time doing your audit, which in return saves you money in man hours. Your audit can be done all online and things don't have to be shared physically. They also have what's called Vendor Direct, which is a single-use virtual card payment. It's a more secure and faster than check payments, and Bill.com does not charge you a fee to send these. Vendor Direct is a group of vendors who all participate in the service. They choose an email and can see the other vendors that are able to receive Vendor Direct payments in their vendor profile with Bill.com. It's essentially an ecosystem of vendors who wish to receive these types of payments. Remote working has become more enticing for newer generations. In this 2020 State of American Workplace report from Gallup, it says that 53% of employees say a role that allows them to have a greater work-life balance and better personal well-being is very important to them. 51% of employees say that they would switch to a job that allows them to more flex time. And 30% would switch to a job that allows them to work off-site at least part-time. If more students going into and coming out of school are looking for jobs that involve working remotely or flexible hours than traditional accounting, then they might not be interested in pursuing these types of jobs. This could cause a profession that is already overworked to diminish as time goes on. COVID-19 has already created more employees to work remotely, but in April 2020, a survey by Gartner found that nearly 23% of CFOs plan to shift 20% or more of finance employees to remote work on a permanent basis. About 52% of CFOs plan to shift 5% to 10% of their workforce to remote work permanently. Another survey by PricewaterhouseCoopers suggested that 54% of companies plan to make remote work a permanent option for roles like finance, IT, and human resources. Finally, more than half or 54% of respondents to a survey by the Institute for Corporate Productivity plan to expand flexible work arrangements in the future, with only 15% expecting to retain the pre-COVID status quo. If these types of fintech products succeed at helping more accountants work remotely, then it could be a competitive advantage for some businesses to retain or acquire new and existing employees. This can help them acquire top-of-the-line talent if they would prefer to work in a company that adopted this type of fintech so they could work remotely with a flexible schedule. Acquiring talent alone for businesses can be a competitive advantage along with having software like Bill.com. Adopting this new work from home regime isn't going to be easy for certain businesses. Everyone has different lives, some have families and some are single. So businesses will have to find ways to make sure the quality of work stays the same as it was in the office. Businesses will have to find ways to make the adoption worth their time, or it might not become a trend that continues if it hinders productivity. The accountants that work for these businesses will be the ones leading the digital transformation revolution in this field. Whenever we think about digital transformation, we might think that it's technology that is evolving the business. That might not actually be the case. Yes, technology replaces a lot of mundane tasks, but there's lots of things it can't replace. These are the human qualities that AI hasn't been able to recreate. Things like creativity, decision-making, imagination, intuition, and emotions. These skills in the future will be highly valuable, and this is where AI frees up people to use those skills. Because of these new, fast-moving technologies, business can be disrupted much faster, and this can put stress on other companies and put them out of business. The arena of winning and losing can be occurring much faster than before, and this could be driven by digital transformation. Eastman Kodak used to have 90% of the market share when it came to selling film, and technology really hindered their business. This chart shows the average lifespan of companies in the S&P 500 from 1970 to the year 2020 and projected into 2030. We can see that the average lifespan has diminished and is projected to diminish into the future. A recent study by McKinsey found that the average lifespan of companies listed in the S&P 500 was 61 years in 1958. Today is less than 18 years. McKinsey believes that in 2027, 75% of the companies currently quoted in the S&P 500 will have disappeared. A lot of tech companies have joined the S&P 500 and are making their presence known. This is where Bill.com's competitive advantage comes in. They could be the reason more and more businesses last longer in this highly technologically evolved era. Businesses being able to free up employees so they can use their human attributes that can't be replaced by AI could in return be their own competitive advantage. Digital transformation could be the next industrial revolution if we look at it from the perspective of merging the physical and digital worlds. Many transitions like this happen before. For example, when we transitioned from using iron to steel in the late 1800s, we also upgraded from using the telegraph to the telephone during that time period as well. Big data, the cloud, and AI are seeming to be the next revolution that will drive businesses into expansion. This is the end of the first video in a 4-part series. Be sure to check out the other 3 videos. I've gone over a lot in this video. If you feel there were any things you didn't understand, feel free to leave some comments below and I can help you out. Thanks for watching, and I'll see you in the next one.